And trading is sort of like a mirror where I get to see myself every day. I see my limiting beliefs when it comes to money. I see my urgency, my greed, my FOMO, everything in the charts. And it's all dependent on me. And I know that when I get myself in alignment, the markets will show itself to me.
That saying was, you have to lose your life in order to find it. You have to lose one way of living in order to find a different one that's better suited to who you are at this particular time. But you can do that, though it takes character. You have to lose your life in order to find it, but you can lose your life and you can find a new one. I've been very fortunate. I feel good. I'm okay. But it's not like when you were a kid anymore. It's not like when you're sure you'll win any fast and loose betting game you decide to play with your body. I've had some insights by this time. I've never really been sick, but it's dawned on me by now that good health is more than just the absence of illness. It's more than just not being sick. Good health is the direct result of right thinking and right living. In other words, of strong character.
Hi everyone, and welcome to my new space. So this is a place that we just moved and have been busy with moving for the past 2 weeks, but I think it's pretty much coming all together now. We're just waiting for our new couch as well as our new bed. I would say that this is one of my larger 2024 and 2025 investment when it comes to productivity. I feel that being in a really nice space helps me work a bit better. We will be renting here for the next 2 years, and I think something really good about renting is that we get to upgrade sort of every 2 years. So every 2 years we throw out all of the things that we're not using and then we just move to a newer space. When you're in a newer space, somehow your thought patterns change as well, and that way it's easy for you to pick up new habits and let go of the old, especially when you know in the past maybe there's this corner in your kitchen that you always go to for snacks, but right now our kitchen layout is totally different and we threw out a lot of snacks. Even if I want a snack, I would have to go out and buy it, other than the Chinese New Year stuff that I still have right now. If you guys are Chinese or Southeast Asian, happy Chinese New Year. Right now I'm currently reading this book called Infinity in the Palm of Your Hand. So it's written by a scientist, Marcus Chon. One of the things that just reminded me of why I love books written by scientists is this: if you squeeze all the empty space out of all the people in the world, you could fit the human race in the volume of a sugar cube, like that. So it illustrates perfectly the mind-boggling emptiness of matter. Like you, me, everyone, we are all pretty much ghosts. And that leads naturally on to quantum theory. So the fact that 97.5% of the universe is invisible leads to, well, the extraordinary, in fact embarrassing, realization that everything scientists have been studying for the past 350 years amount to nothing more than a minor constituent of the universe. I really enjoy reading stuff like this because it reminds me of how small things are when it comes to the bigger picture. We're all just humans, collecting our own experience of this life and then passing it back to this motherboard, sending back all of this data that we have collected in our lifetime in order for the next generation of humanity to do a bit better. So whatever we're doing right now is just to build steps for the next generation to step on our shoulders and climb even higher. So it's all about the mindset, because you can find people who are thankful that they have went through experiences that now lets the younger generation become easier, and that is who I want to be. Anyway, I'm still doing my usual habits wherever I am. I'm still meditating, writing my journal, waking up before 8, taking my Shilajit, which I will link the 10% off code on my description if you guys want some recommendation, because I know there are a lot of Shilajit that are not properly filtered and you can end up being poisoned by heavy metal. So yeah, I'm really happy about this place. Like every time I wake up and I look at the high ceiling, I'm just like, yes, this is what I want. So the reason why we moved is also because that the previous place had its lease ending, and we also want a room for ourselves. So this is my room. I have my computer set up, I have my books, still a bit of boxes over there, and this is my wardrobe. And then we have Philip's room over here, as well as our master bedroom. So here's our kitchen. I really like this window. Having natural light coming in when you're cooking is amazing. We are quite high on the floor, but we are also right beside the highway, so it's a bit noisy when I open this up. But overall, I'm really happy with this place. I think the moment we saw it, we fell in love, but we were, you know, still trying to hide it because we don't want the property agent to feel like they got a hold on us, you know. And one more thing is, I really like that it's central, but I want to show you guys a view. I want to show you this Starbucks over there, this beautiful little thing. So that Starbucks which you saw just now was actually where I first started learning how to trade. So I would go to that Starbucks every single day, like a proper 9 to 5, and just study over there. I don't talk to anyone, I don't meet my friends because I just left my job and I have no money. I was just living off of my savings with, you know, majority of it inside a trading account, trying to make it work. Basically, I was spending at least 6 months of my early 20s just trying to figure out how to trade, how to build a algorithm by stacking up 5-6 different indicators. And back then I was learning from this guy called No Nonsense Forex. So you can still find him on YouTube, and I'm sure VP is still making impact out there. But basically I have moved on from that method, but I am very grateful for the times that I was spending there in that Starbucks, learning and going through all of his YouTube material, just going through all of MQL5 and those thousands of indicators. Some are lagging indicators, some are leading, and some are even repainting. Through that experience, I realized what kind of trader I want to be. Consistently looking at the charts is just not something for me. And right now I've moved on to, you know, having a specific time frame where I would only go in for New York opening and also London session. But in the past, I was really just looking at it every moment, trying to find a trade to make money. But you know how it would go, right? Like if you're consistently just looking at the charts every day, not knowing when to stop, you're gonna lose more than you win. Looking back at that area, I don't know if I ever did think about this, you know, back then when I was studying. Maybe I stood up, look around at the houses near here and said, oh, one day I'm gonna move to one of this. Because if she did, you know, if Joyce back then actually had that wish, I'm here to say right now that you made it. You live in that area, which is what you were working towards back then when you were studying there. Anyway, this area is central, and I grew up living in the very far east side of Singapore, which constantly takes like 1 hour just to get to town. And right now I'm probably like 10 minutes away from town. So to me, that's actually an achievement, because I used to think of how much time I wasted just traveling back and forth. This is a little celebration for me, and right now I'm gonna go talk about more of the investments I have made as a trader. So it's Valentine's Day, and Phil just came back with some flowers. I have listened to this part on Jim Rohn's book, and it's about living in style. So basically, if you can give someone a bigger tip, just give them a bigger tip, because you're gonna live the rest of your day feeling much better than if you chose the smaller tip to give them. In life, other than survival, you're here to actually thrive and feel good. And how much, you know, all this little $1, $2 thing can make someone so happy for the rest of the day. And that's what living in style, your lifestyle, is all about. I want to be talking about the expenses I have every month as a trader. This house, okay, this whole entire place, which we will be investing for the next 2 years, I call it investment, not because it's going to return me money, but because it's going to give me a lot of mind space, my own office. With that, I can actually 10x my income just by being more focused, more in my space, you know, more away from people. Okay, not really. And work is not even difficult, right? It's fun, it's about learning. And trading is sort of like a mirror where I get to see myself every day. I see my limiting beliefs when it comes to money. I see my urgency, my greed, my FOMO, everything in the charts. And it's all dependent on me. And I know that when I get myself in alignment, the markets will show itself to me. Okay, back to the expenses part. This place would cost us $144,000 in 2 years, which means it's roughly $6,000 every month when we're staying here. So next, I paid $27 a month for Tradingview. I got like the best version there is, and I also paid during Black Friday, so it's a bit cheaper. For a copy trader, it's $10 USD per account, so it's $40 every month that I'm paying for this. Tradingview has this live data that is called CME that I'm paying for my Nasdaq futures, so that's additional $8 every month. Notion, I use it for free. So my journaling tool that I'm using right now, because I don't have a team with me, I'm just an individual account, I only pay $0 every month for it. So the next thing I want to be touching on that really helps me with my productivity is having this Apple Watch. So I didn't really have to pay for this because this is just an old watch from Philip, but I realized the value of collecting my data over a span of time. So all this are considered, you know, like something that takes up my mind, so it's considered an investment for me as well. Alright, and the next investment is actually in this MRCI, let me see, MRCI, historical price chart, seasonality price chart data. So currently it's $49 USD every month. I'm deciding to just buy it for the first month and then, you know, just screenshot a lot of the charts that I will be using and just save them into my Notion. I would also add them into MissFunded.com for those members who are already with me and just share it on the analysis that I get from reading all these charts. Here's an example on how to use it on my screen. So imagine like from April to June, around this time frame, you see that Australian dollar has a spike up and then a drop down, right? And then when you look over at DXY from April to roughly June, you can see a spike down and then a up. So since Australian dollar has Aussie first and then dollar, you can anticipate for Aussie to go up and then drop down around the period of April to June. So I've picked out an example that is a bit more obvious, and not every year is going to look like that, but it's just something for us to keep a lookout for during April to June period. So just note that these are also not intraday trades. These are proper, you know, daily time frame swing trades. So here in 2022, we have roughly April all the way to June. So if you just look at this on the daily time frame, you could see that this is an old high, right? On the weekly time frame, it's quite a significant high over here. Price went all the way up and then away from it. So when April comes around and you see this big spike into above these highs to take out the liquidity, you can anticipate that this high is going to hold, and therefore you see Australian dollar push up, take out the high, and then down for this inverse. So even beginning of April, you can already anticipate it, because this data at the back is based on a 30-year. So usually it's just giving you this average of the past 30 years, what it tends to do. So you have to anticipate it and not just look at, you know, like, oh, April 13, it's gonna happen at April 13. That's not true. It's just the average over the past 30 years and the past 15 years. So I've turned off the 5-year one because it's a bit more messy. So this is how you can use the data. So for the next investment that I have done, it's right now February the 14th, happy Valentine's Day. I realized that I have not been trading for the past 2 weeks because I was still trying to get a hang of the markets and stuff. So I've already purchased 2 funded challenge accounts at 50K each. So these 2 are from different companies, and I'm currently just testing them out to see if, you know, their spreads are good, whether it matches my copy trader, and whether they even have these futures, you know, that I'm trading at. So I'm currently trading Nasdaq futures, right? But when there are companies without Nasdaq futures, I would just go back to the Nasdaq index itself. So most of the time, their values are different, but their movements are roughly the same. So a lot of times, if this one moves by like 50, the other one moves by 50 handles as well. So So that is just what I'm counting on. I'll keep you guys updated on whether it's working out for me. But I want to be here to record like my winning trades, my losing. It's just that right now, I still don't see the need for me to start trading again. So for the backtesting results that I did on January, I realized that with my method, I'm only supposed to be down by 1%. So I have two methods that are working right now, which one of them is called the Judah Swing, which is by ICT. But I just put it in a system, you know, that's sort of like algorithmic so that you know exactly when to enter, when to exit, and you can read up more about it on my blog. But basically, this Judah Swing has gotten us 9% profits, while the other method, which I also put in my course, is minus 10%. You know, a grand scheme of things that would have lost you your funded account anyway, right? But if I was using both of my methods, I would not be losing any accounts. But the thing is, I realized that I was not consistent with my trading. I decided that I should start journaling again. So speaking of data and journaling, I went back into last year just to see what I was doing last year. And look at me. I was journaling, okay? I was journaling every day. Yep. So fast forwarded to right now, as you can see, I did one monthly projection and then I just stopped doing it all. And you can also see from the previous video, I was sort of watching TV while trading, right? So right now, I want to build up that habit again. So this is how I journal. I have this trade calendar on my Notion. When you have your calendar view already, you see this little plus arrow here. You can just add an item and then just type in, you know, what market you are currently looking at. And then every time you press this, you know, slant thing, it's actually a command where you can add in what you want this space to be. So I would usually do weekly. I would usually pick a heading and then I'll do weekly, daily, H4, H1, and then when market opens, then I'll go into minute 15, minute 1, etc. So with my method, I actually stop at H1 and it's really very straightforward, which is why I stopped journaling. But that is also something that I don't want to take for granted anymore, because knowing that I should have only lost 1% last month and not knowing which dinner I was out at, you know, or like which losing trade did I take and which winning trade did I miss, is something that I just cannot let myself live with anymore. So I'm gonna do more analysis on the weekly and daily and then see how it actually helps with my entry on the H1 and, you know, market opening. All right. So here's an example of what I have written yesterday. Oh yeah. So I also would do a screenshot of what news is coming up so that I know that on that day itself, should I skip, you know, 8:30 because it was CPI? Yes, I should. Then I would only enter, you know, on the equities opening, which is 9:30 a.m. So here we have weekly, and then I would put down my bias on weekly. And then on daily, here's my bias. Price may drop lower into daily bullish order block, which is right here. So the thing is, what I do, right, is I would go on to Tradingview like that. Okay, and then I'll press on this little camera button and click on copy image. So the moment you click on copy image, right, you can go back into your trade calendar. This is just an example, and you press Ctrl V, which is paste, and then you will get the exact image there. So make sure that it uploads finish before you go on to another page, because sometimes it just stops the uploading when you're not there. Okay, so if you want to see it again, you can just double click it and open it up, and here you have your image. So going back to this example, this was yesterday's journaling. So you can just do full width so that when you open this page up, you know, it takes up the entire of the screen. So here we have price may drop lower to bullish order block, which is this area here. And then price may drop into 1770, which is in line with daily bullish order block here. Two new NDOG, which is new day opening gap, and then one new wall, which is new week opening gap, and it's also a H4 fair value gap over here.
if you see my mouse over here. Okay, so then going into H1, price has taken out Asian high before pushing lower during London. So Asia is over here. Oh wait, we're looking at here right now. So Asia is over here, price pushed higher before pushing down. So imagine if from the start of the week, right, on this weekly candle, when it opens up here, I'm already anticipating for price to come back down to fill up this previous week's high, which is the fair value gap that is not formed yet, but I anticipate for price to come back to return to this previous week high. Then my bias would be bearish. So anytime price opens and then push higher, I can take a sell there for price to go lower. Right? So like in this case, my bias is short, so I would only be taking short entries. So for example, if I want to, I can just take it at the break of the lower Asian range or one standard deviation above the Asian range when price reaches there. But overall, my bias is to go lower. So any of these lines I could have been like short, but I did not take any trades because I'm still trying to get a hang of the markets. I've been taking a break for quite a while, and right now I'm just trying to get my like familiarity back with it again. Like say hi, like markets, how you doing? Take the market out for dinner, familiarize yourself with it. So at 8:30 a.m. New York, you can see that price just pierced through the entire daily order block. So before it did that, it actually tapped on this new day opening gap again before pushing through the entire order block. So this is the daily order block, right? In the smaller time frame, such as this 1 hour, you can see price actually, disrespecting it, closing beneath it, and, whipsawing all over it, right? But the thing is, it's a daily order block, so you have to give it leeway for it to do whatever it wants within the day itself and expect it to close above the daily order block. So the closing price just has to be above, this 50% for this order block to still be considered valid, right? Still be considered respecting price move. So let's just go back into this Tradingview chart and see what I'm talking about. So daily, okay. All right. So as you can see, it closed within this daily order block. So even though the wick actually went down all the way to previous week's low, taking it out, it closed inside this daily order block, right? So in a lot of cases, if a lot of people are taking this entire thing as the daily order block, then it would still be considered as respecting it. But I was just taking the upper half, 50% of it, as the daily bullish order block. If overall, right, the weekly time frame is still showing me bullishness, then I want to see more bullish move, which means the low of the week should solidify by Tuesday, and Wednesday giving us signs whether it wants to reverse, Thursday being the expansion, and then Friday being like the TGIF trade where, it comes back to 20 to 30% of the entire week's range. So an example would be, this will be this week's low, and then imagine that this is this week's high, Monday right now. I would expect if Tuesday was to form this low, Wednesday giving us, like a consolidation, I would expect Thursday to take out Monday's high, which is here, and then give us a new high. And then with my Fibonacci, I now open up 20 to 30%. Okay, so this is what I anticipate price to do. Wednesday give us a consolidating candle. Thursday taking out, the high of Monday, creating a new high for the week. And then Friday just coming back to 20 to 30%. So this is my bullish view on how I think a market weekly profile should look like. But we'll still see. I like, just anticipating and then see what price does, because that is when you learn. Days later, and this is what price have done. So we have Monday, Tuesday, Wednesday stayed within the previous day, Tuesday's candle. And then Thursday, we took out Tuesday's high. And then Friday, we reached into the opening price of the week before giving us the TGIF. So right now, going into hourly time frame, you can see that this was Tuesday's move. And then Wednesday, it just stayed within the candle. And then Thursday, it went into this H1 bearish fair value gap, which ultimately became an inverse fair value gap, and then reached into the last premium PD array in this entire range, which is the bearish fair value gap over here. And we have a drop off back into the daily bullish order block. Moving back to the journaling part. So here is what happened yesterday and what I have learned from it. This morning I continued, writing up this journal just to see what price did and how I could have entered. So 8:30, there's no way of entering. Within 1 minute, it just pierced through the entire daily order block. And that is not a trade that I want to be taking as well. So a lot of people could, potentially just add a short before that and then let, CPI, take them into the trade, because we have Asian range, manipulation, and then London has already done its manipulation. So New York is just a continuation, right? But I would not trade that way. So here I've written down that, okay, this is next day now, 6:25 a.m. p.m. in New York. So the market has already played out. And what I can see from here is that during 9:30 a.m. opening, price actually returned back into this fair value gap, this minute 15 fair value gap, as you can see from this time frame. So it went to 50% of it. So how can I, capitalize on this move itself? So I went down even lower into 1 minute time frame, and I marked out the macro timing, which is 9:50 to 10:10. So usually this macro timing is where you can look for a trade that is in your favor. For example, if you already anticipate that it will come up and fill up this minute 50% of the fair value gap, then over here you can see a displacement upwards, breaking market structure on the equal highs over here. And here is a fair value gap. So if you just extend this fair value gap, you can see that the entry would have tapped you in on this red candle, and then it gyrate for a bit. Over here, you're in drawdown before price push all the way up into 50%. So this trade would have been a 1:3 risk to reward. Yeah. So this is the macro. So even though I was not in the market, I like to just look back and then tell myself a story. Because the more you tell yourself this kind of story, the more you can anticipate it when it's about to come. All right. So this is how I do my journal. For those who want to participate in this 50K funded challenge giveaway, leave a comment in the section below telling me how you journal your trades, because I'm using Notion. And what about you? Are you just screenshotting and putting it on Google Docs, or are you writing it down manually? I want to know in as much detail as possible. So this giveaway entry would end on 29 February and I will pick the winner on 1st of March. So also leave me your IG handle. So that would be where I will be reaching out to the winner, and I find it really much easier than YouTube comments and stuff. So make sure to leave a comment telling me how you journal your trades as detailed as possible, and leave your Instagram handle to take part in this competition.